What a remarkable housing market we have right now. The share of price reductions just reached an all-time record high. Inventory is up by double digits, yet home prices are very close to all-time record highs. But I have some news to share regarding some future indications of home buying demand and closed home sales based on a new report from the National Association of Realtors, which showed us that pending home sales, a measure of contracts being signed between buyers and sellers, reached a new all-time record low for data that goes back all the way until 2001. So the level of contracts being signed right now are worse than the Great Recession of 2008. I have a lot to share in today's video. Let's go ahead and dive right in. This report from Redfin was just posted today, which is August 29th. It says falling rates have yet to improve home sales. So we're seeing this environment in which rates are decreasing, yet sales are not improving. And we'll talk about that here in a little bit. Pending home sales posted their biggest year-over-year decrease in nearly a year, despite the median U.S. housing payment dropping to its lowest level in about 5 months. So decreasing your average monthly housing payment is not due to the fact that prices are cratering, it's due to the fact that rates are going down, making your average housing payment a little bit less. Would-be home buyers are waiting for clarity about the NAR settlement, the National Association of Realtors settlement, regarding commissions, the presidential election, and whether rates will fall more. So please leave me a comment below your thoughts regarding that. Are you guys also waiting on the sidelines due to any of these reasons as well? I'd love to know. So according to Redfin here, it says sales are not improving because many would-be home buyers are playing the waiting game. Redfin agents report that house hunters are out there touring houses, so people looking at houses, yet they're hesitant to buy right now. Would-be buyers are waiting for one or all of the following. So let me know if this pertains to you. Clarity on the NAR settlement. The new rules of how agents, buyers, and sellers negotiate agent fees or agent commissions went into effect on August 17th, about a week and a half ago. So if you guys missed my previous video I posted about 2 days ago, we went in great detail regarding that settlement. But there's two main things that happen here. I'll briefly say it because this is very important. Number one, as an agent listing a home for sale, I cannot put what the commission is being offered to the home buyer. There's no longer a field on the multiple listing service or the MLS. So agents can't filter by the commissions being offered. They can't delete listings that are offering a low commission because that field is entirely gone. That's number one. Also, number two is that if you're looking to buy a house, before you actually look at any houses, if you want tour houses with an agent, you have to sign a buyer-broker agreement. Those are the two things that are basically new due to the settlement, which again just went into effect about a week and a half ago. It also says here that some home buyers have been scared off by agents falsely claiming that the new NAR rules require an exclusive buyer representation agreement just to tour a house. So let's just kind of clarify this. There are a number of different agreements that you could sign with your agent, and I imagine this is going to actually vary by the state. So the California Association of Realtors, which is where I'm located here in the greater Sacramento area, they have a number of different new forms that you have to sign prior to touring any houses. But it does not have to be necessarily an exclusive agreement. It can be a non-exclusive agreement in which you can sign that agreement with 100 agents if you wanted to. So it's either non-exclusive or exclusive. There's a checkbox for that. Also, this new agreement is also stipulating in detail in writing the fees that the agent is asking for to be paid, whether by the seller or by the agent. That could be a fixed amount. It could be a percent of the purchase price, or it could be a set dollar amount per hour that's being charged by the agent. And again, if you missed my previous video, we went into great detail regarding this and how different structures regarding how buyers could pay for agent fees or agent commissions if the seller is not willing to pay for those. So far, based on my own personal experience, actually just wrote an offer for a client about 2 days ago, and we wrote in there for the seller to pay for my agent fee or my buyer agent fee. And we got a counter offer back, and the seller did not counter out that stipulation that we're asking them to pay for my buyer broker fee. So I'm not seeing a lot of pushback from sellers just yet, but I imagine that's going to vary by the area and potentially by the house as well. In any case, another reason why some home buyers may be kind of waiting on the sidelines, according to Redfin here, is lower home prices, lower rates, and of course the outcome of the presidential election. If you guys are looking for home prices to decrease, I get it. And also I mentioned that because we're very close to record highs that was set back in July. So home prices overall on a national level are very close to all-time record highs. But in today's video, I'll share the 7 metros in the US out of the 50 most populous that are down on a year-over-year basis. If you guys are waiting for lower rates, I would urge you to buy sooner rather than later, because when rates decrease, that's going to cause a lot of these home buyers to get off the sidelines, which will increase potentially the amount of offers being received. So it could be a more competitive market in an environment in which rates are decreasing. This is very important to note here as well. It's worth noting that if mortgage rates drop significantly, that could lead to more competition and of course, higher home prices. And also again, if you guys are waiting for the Fed to start cutting interest rates potentially in September, the mortgage rates we're seeing today have already baked into the fact that the Fed may cut rates in September. So it's not like the Fed decreases rates and then that day mortgage rates decrease. The rates today have already accounted for that expectation that the Fed will decrease rates next month. All right, let's change gears slightly here and talk about some future indications of home buying demand. So the average daily rate as of yesterday, which was August 28th, decreased to 6.37%. That was the lowest level since approximately April of 2023, excluding one single day, which was the first week of August, one day in early August. So basically at a 1.5 year low, down from the 7.29% we saw 1 year ago. Now, as of today, which again is on Thursday, August 29th, the average daily rate, according to the Mortgage News Daily, for people with great credit, of course, increased to 6.41%. Jumbo is at 6.6%. FHA loans is around 5.8%. Let's have a look at this chart. The daily rate right now at 6.41% is actually the third lowest levels since approximately April of 2023. Before that was yesterday at 6.37%. And also on August 5th, when it decreased to 6.34%. 1 year ago this time, we were at 7.12%. So rates have decreased by about 71 basis points from 12 months ago. Let's also take a look at mortgage purchase applications from the MBA. That did increase by 1% from 1 week ago, but we're still down by 9% from 12 months ago. Also, Google searches for homes for sale, I think it's supposed to be homes, not home for sale, was an increase of 10% from 1 month ago, but we're still down by 3% year over year. Now, here's something that I just kind of laughed at when I read this morning. We excluded, normally right here, you'd see, or kind of in this section here, you would see Redfin's Home Buyer Demand Index, which is a measure of requests for home tours and other home buying services from their agents. It says here, we excluded their index this week to ensure the accuracy of our data. It'll be back next week. It's like, what in the world is going on? So here is a report from, not that right here. This is a report from 1 week ago. And you can see right here, Redfin's Home Buyer Demand Index was up by 4% from a month ago, but down by 8% year over year. So it should be right above touring activity. But this week, I should say, it disappeared. Now, here's the funny thing. Kind of laugh at this, right? You would think that there's no data regarding this index because it's not here. But if you go down to the very bottom of this report, Redfin, it's right here. It's just laughable. So they do have the data because this report covers the 4 weeks ended August 25th for all these stats in today's video. And they have the chart right here. So I don't know why they don't mention this, but it is down 12% year over year because you can see here, it was up last week, which is right here. It did increase last week, but before that, this week, it actually decreased. So we're down 12% year over year. Whereas last week, we're down by 8% year over year. Anyways, isn't that kind of funny? They actually still shared their chart, but they had to provide this verbiage here that's saying that they want to make sure it's accurate. But why would you still share their chart if you don't think it's accurate or not? I don't know. It just makes any sense to me. Moving on. That's crazy. So one thing I want to mention as well is that another future indication of home buying demand, of course, is pending home sales. And today, which again is August 29th, the National Association of Realtors posted their pending home sale index for the month of July. And based on this report, it says here that pending home sales dropped by 5.5% in July. But of course, I have a lot more to share regarding that. I'll provide a link in the video description below for this, but they don't provide a whole lot of analysis regarding this index. But they did say here that was the lowest reading since they began tracking this data back in 2001. So therefore, their pending home sale index, a measure of contracts being signed of existing houses, fell to a new all-time record low for data that goes back through the year of 2001. So contracts being signed right now are worse than 2008, when of course we had the Great Recession. For comparison's sake, the all-time record high was set back in August of 2020 when their index was at 128. Obviously, a high number means that buyers were getting the offers accepted. There was a lot of pending home sales. And of course, a low number means there's a lack thereof, which implies a low level of closed home sales in the coming months as well, right? So 70.2 right now, very, very low. The previous record low was set back in May at 70.9. Let's also have a look at rates for the month of July as well, because that's when contracts were being signed, right? Back in July from this report. So back in July, the average monthly rate, according to Freddie Mac, on our good Uncle Fred was at 6.85%. That was a 3-month low, the lowest level since March this year, when we were at 6.82%. Therefore, the decrease in rates from around 7.06% back in May down to around 6.85% did not cause more contracts being signed between buyers and sellers. In fact, it fell to a new all-time record low. In my opinion, the reason for this fallout in contracts being signed right now is really to the fact that we have relatively high home prices, very close to the all-time record high that was set just about 1 or 2 months ago. So we have that. So of course, a small decrease in rates is not really improving housing affordability very much. On top of that, we have the presidential election. We have this NAR settlement to try to figure out how that's going to affect our housing market. Time will tell. All these things that are impacting overall people basically sitting on the sidelines right now. Here's something also I found interesting as well. So their index, which by the way is seasonally adjusted, it's also annualized as well, making it very easy to compare month over month changes here. So that fell by 8.5% compared to July of 2023. This is pretty crazy here, right? It now has decreased in 36 in the past 38 months. So in about 3 years, there's only been 2 months in which their pending home sale index increased compared to the previous year. In fact, the last time it increased was way back in June of 2021. Therefore, home sales have been sinking to very low levels for quite some time. The crash in sales that occurred in 2023, when for the year as a whole, we basically had nearly a 3-decade low, the lowest level since 1995, really haven't made much of a recovery just yet. Also, the year-over-year change down by 8.5% is much worse than the long-run average, but it's not as bad as what happened 1 year ago. About last year, back in July 2023, we saw a giant decrease down by 15% compared to July of 2022. Now we're down by only 8.5%. In other words, pending home sales are still decreasing, but the rate is not as high as it was 1 year ago. So based on my nerdy Excel formula here, the median number of their index going back to the year of 2010, this is the July year-over-year change, is a decrease of 0.1%. That's a normal amount of changes in contracts being signed between July and July each and every year since 2010. Is a decrease of 0.1%. This year it fell by 8.5%, so much worse than the long-run average, even though it's not as down as great compared to 1 year ago when it decreased by 15%. On top of that, it decreased by 5.5% compared to June. Much worse than the historical average because the median number since 2010 is a gain of 0.5%. This year, it decreased by 5.5%. On top of that, looking at pre-COVID levels, we're down by 34% from July of 2019 and down by 33% from 2018. So basically what this all means is that we're going to see a low level of closed home sales in the coming months because of, basically a lack of transactions being occurred or being signed between buyers and sellers on a national level. One more thing I want to mention regarding pending home sales is that every market is different. So NAR has 4 major regions. That's the Northeast, the Midwest, the South, and the West. So here's what I found to be interesting. There's only one region that posted a gain, either month to month or year over year. That was the Northeast, saw a gain of 2.4% from 12 months ago. All other regions posted decreases. In fact, the biggest declines occurred in the Midwest, down by 11.4%, and the South decreased by 11.5%. On a month-to-month basis, June compared to July, all these regions posted decreases. In fact, the biggest decline was actually in the Midwest, down by 7.8%. All right, let's get back to Redfin's report, and let's talk about the median sale price. So we're just under $390,000. That's up by 3.6% year over year. About 1,000 higher compared to 1 week ago, but down by about $6,000 from the all-time record highs that was set during the 4 weeks ended July 7th. So we basically have nearly all-time record highs right now, which is likely impacting pending home sales, right? When we look at the 50 most populous metros, there's now 7 metros that are down year over year. Last week, in fact, there was actually only 5 metros. So those 7 metros are Austin, Texas, down by 2.8%, Fort Worth, Texas, down by 1.5%. Then we have Tampa, San Francisco, that's a new one. San Diego is also a new one as well, I believe, down by 0.3%. San Antonio also down by 0.3%. And Nashville, Tennessee, experienced a decrease of 0.1% year over year. In contrast, the biggest increases were Philadelphia, up by a whopping 15.1%. I have no idea about the Philadelphia housing market, but if you guys have any insight regarding what's happening there, please leave me a comment below because that gain is huge, especially compared to Austin, down by nearly 3%. After that, we have Milwaukee, Anaheim, Nassau County, New York, I'm probably mispronouncing that, up by 9.7%. And Providence, Rhode Island, up by 8.5%. So big picture, 43 of the 50 biggest metros have posted gains year over year. Only 7 are down. All right, for the 4 weeks ended August 25th, let's have a look at pending home sales, new listings, and active listings, as well as the month supply. So pending home sales decreased by 6.9%. The biggest decrease since October of 2023. I would say the biggest yearly decrease since October last year. New listings, a measure of people listing their houses for sale, that actually increased by 3%. So new listings are not skyrocketing, but we're seeing a big, or I should say a significant decrease of contracts being signed, despite the fact that there's 16.7% more homes for sale right now, but that was the smallest increase since April this year. Also, the month supply is at 3.6 months. A more balanced housing market is probably in the range of around 4 months supply right now. Let's take a look at Redfin's data center regarding new supply hitting the market first. So again, that increased by 3% year over year, basically losing momentum, to be honest with you guys, because back in April, for example, we saw a gain of nearly 14%. So this is the orange line is this year. The line below that was last year, 2023. The black line is 22, and the darker orange or lighter red is 2021. So we saw a big increase of new supply hitting the market this spring, but ever since the summer months, basically losing momentum and a small gain of 3% year over year. That's new supply in the market. Here's pending home sales, kind of the opposite scenario because pending home sales were very close to last year's levels basically all year. But over the past couple of weeks now has been going down at a faster clip compared to last year. Now it's down by 6.9% year over year. The previous week was only down by 5.2%. In regards to active listings have basically peaked this year. It actually peaked early this year than it normally does. So right now we have approximately 17% more existing houses for sale right now compared to 1 year ago, which is actually a small gain compared to the 20 to 22% gains we saw in the mid-summer months. So at 16.74%, this is actually the smallest year-over-year gain we've had going all the way back until the 4 weeks ended April 14th. Back then, we saw a gain of 16.5%. Let's also take a look at the 50 most populous metros and see how they fare because, of course, every market's different regarding pending sales, and then we'll have a look at new supply in the market or new listings. So San Francisco led the nation regarding pending home sales, giant increase of 9.1%. After that was Boston, San Jose, California, Los Angeles, California, and Riverside, California. So 4 of the top 5 markets are located in California. If you guys might missed my previous video regarding the California housing market, I made a video about 4 days ago. So take a look at that because overall in California, we're very close to all-time record highs in home prices. And of course, we have far fewer homes for sale right now compared to 2019. Much different compared to the glut inventory in Texas, Arizona, and Florida, for example. Looking at the biggest declines of pending sales, that's actually in West Palm Beach, Florida, down by 16.3. Then we have Atlanta, Miami, Fort Lauderdale, Florida, down by 15%. And then Tampa, Florida, down by 14.5%. Looking at new listings, that increased the most in San Diego, up by 15.2. Then we have Los Angeles, San Jose, Phoenix, and Montgomery County, Pennsylvania. In contrast, there's 14 metros that are down year over year. The biggest decline in new listings is Atlanta, Georgia, down by nearly 17%. Austin, Texas, down by 8.9%. San Antonio, down by 8.2%. New York, New Jersey, 7.2%. And Tampa, Florida, down by nearly 7%. All right, let's also talk about how fast or how slow houses are selling right now. The median days in the market is at actually 35 days. This is much higher compared to 1 year ago, which is in orange. Back then, at this time, it took about 30 days to sell a house. Now it's at 35 days. So houses taking about 5 days longer to sell right now. It's also worth noting here that days in the market is basically at least a 3-year high right now. Also, the share of price reductions also reached a new all-time record high at 6.8%. Higher compared to the previous peak that was set, I think it was last week, but also very close still to the peak that was set back in November of 2022. And this is easily at least a 3-year high as well. The share price drops back in 21 was only at 3.5%. And basically we're double that share right now at 6.8%. And lastly, the average sale price to final list price ratio is at 99.1%. This means on average of all the houses that actually did close in the past 4 weeks, they sold for 0.9 percentage points less than the seller's final list price. I said that right the first time. And that is at least a 3-year low right now. Much lower compared to last year, not much lower, but lower still. Last year this time, as well as 2022 and 21, houses on average were selling a little bit over asking. So for example, back in this time last year, that ratio was just over 100%. Same goes for 22. In 2021, that ratio was very close to 2%, which means homes were selling about 2% over asking. Now they're selling for about 1 percentage points less than asking right now. But that's today's video. Thank you so much for watching today's video. I appreciate it so much. Please like and subscribe. Also, if you guys want a real estate agent referral, check out my website, which is realestateteamfinder.com. Or if you want to buy or sell a home in the greater Sacramento area, approximately 90% of our clients actually come from YouTube, believe it or not. You can email me at jason@meetjasonwalter.com. Hope you guys have an amazing day. I appreciate you guys so much, and we'll see you in the next video.